Yo, what's up, guys? In today's video, we're going to do a recap of today's trades. And specifically, we're going to go over the 100% trade. We had a 125% trade on SPY today. I'm going to go over what happened today and what basically led to me entering that position. So right now, the time is 6:10. The market is closed. AMD had earnings. Everything's kind of over with. The volatility is low, kind of low right now. We still have to see what the overnight futures look like. But let's just hop into what happened today. So if you look at what happened on the daily candle, if you look a little recap, from yesterday we got rejected off the upper Bollinger Band. We had a very big red day today. We kind of got bought towards the end of the day. However, I do think there is going to be a continuation following tomorrow. I think FOMC is probably going to launch us a little bit, but I think the first move is probably going to be green, second move is probably going to be red, and we're going to probably finish the day around minus 1% day. Nothing too shabby for an FOMC day. If you guys have never played FOMC, literally the market is not going to move until like 2:30. If you're playing the market with like before 2:30 tomorrow, it's going to be very tough for you to find positions. You're probably going to see very low volume, very low float. You're going to see a lot of stocks have just minimal volume, just flagging up and down. I would avoid it if I were you. However, you can make money. I'm not saying that you can't. But me personally, I'm probably just going to sit out unless I see a really good opportunity for a short. I'm not really bullish into FOMC. I think buyers are still here in the market, but all the news that's coming out recently has been bearish. I can't imagine FOMC sending us, or even if they like confirm that we did soft land or whatever, I do think that they're gonna say in the future, like Fed's gonna say in the future, we need higher BPS, more tight federal regulation on the market and the economy in general. That's what I think is gonna happen. If you guys were asking, today we had a big red candle. We got bought up a little bit. So what happened today? Today I started my day off with Netflix puts printed. These were bangers. Look, I started my first candle. I got my short. So the 15-minute chart. Got my short. Got my bear. I actually exited around for 10-15% on this second candle. But if you were able to play this all the way down, I honestly just didn't like the price action in the morning. If you look at the 5-minute chart, it was kind of just flagging in the morning. So it was a big red candle. And usually after big red candles, the price is kind of unpredictable. So we had one kind of hollow candle, then followed by another small candle, back-to-back green candles right after that. So I was just kind of worried about, maybe prices found the bottom because we had 1, 2, 3 wicks. And I just really didn't know what was going to happen next. And in that type of scenario, since I'm already up on the position, I don't like to risk. I don't want to see those contracts go red, so I just sold for my 10-15%. Still made money, still made like a good $30 on that trade. Not bad, not too bad. So now we zoom out on the 15-minute chart. If you saw what happened, these puts that we entered. I honestly forgot which contracts we entered. I think maybe it was 315. So 315 went up 80% since I called them out. That was a really good banger trade. And I also try to play the upside on Netflix calls. We did get out of those with profit. I entered around here when I got the long and the bull. And we did hover around 20%. I just wasn't going to take profit at that though. Honestly, looking back on it, I probably should have. I took profit around 5%. We still finished the contract screen. Just a lot of chop. If you look at the chart, it just wasn't moving as much as I would have liked to. So yeah, I honestly took the 5%, but you could have taken the 20% once they were there. I did point them out that there was 20% on the table. But yeah, let's go over the main trade of the day. The main trade of the day was SPY. SPY was the big boy today. If you take a look at SPY, we broke through all the pre-market levels. We kind of opened very red. We saw the same kind of thing that we saw in the Netflix setup. We saw a few wicks. So people were trying to buy calls in this. And honestly, I really like the idea of buying calls when you see that many wicks. However, if you take a look at what happened in the morning, VIX yesterday was able to reclaim. If you look at the one-day chart, VIX yesterday was able to kind of reclaim the 16.16 area. That was a key pivot point. If you remember this candle right here, was a key pivot point. We were basically close enough to that point where I was kind of looking for a bearish entry, because when VIX goes up, usually market goes down. It's not always a surefire indicator. And if you really want to play positions for like If you're looking at the market, not just like scalping contracts, but you just want to look at the market in general, VIX is one of those things where you just have to keep in mind, like, what is VIX at? Because VIX is going to tell you how much your contracts are worth. If your contracts are worth a lot, VIX is also very high. So, and if your contracts are worth nothing, that means VIX is very low. So, obviously, in my mind, the market makers don't want VIX to fall much lower. Having VIX at like very historically low level. This is not the all-time low for VIX. VIX did reach 9 back, I think in 2009, 2011, something like that. I'm not exactly sure what the date was, but VIX did hit 9. So we technically haven't bottomed out yet. That was the lowest that VIX has ever gone. But from a market maker point of view, you do not want like VIX to keep dropping. That's not smart. The options chart is going to be unplayable. You're going to see every options chain is going to be minimal movement. You're probably going to make $1 to $2 on like every few cent moves, which is just not worth it for like. It's not smart. It's not smart to be playing options when like VIX is so low. Honestly, that's just my point of view. When VIX is in a very big like bear run, and when the market is in a bull run, like, you're going to see, like, contracts are not worth playing. So, we're going to come back to this topic of VIX. So, let's go back to SPY. With SPY going down on the 5-minute chart, you'll see that VIX rocketed. VIX has been kind of consolidating around this area. You'll see it's been in this tight little zone. Ever since yesterday, we've been in this tight little zone from this lower Bollinger Band of 16.5 to the upper of 16.7. When you see a tight range like this, when you see this very tight range, this is actually pre-market. If you look at even before that though, we're in a very tight range. When you see a tight range like this, you're going to want to look as to where we break out. And I'm going to come back to this theory of like this thought of breaking out according to Bollinger Bands. I'm going to show you how I use that same process onto the SPY trade. So right here, we're in this like zone of just consolidation on VIX, and then you'll see that we stay above this. Okay, I'll try to hide one of my indicators so you guys can see. If you just look at the Bollinger Band, and we just turn this off. If you look at the Bollinger Band, you'll see that there's an orange line. This is kind of like an equilibrium line. This is like the median. This is a 0 point basically. The way to tell which way the market is going to go according to Bollinger Bands is the market is going to Bollinger Bands are going to show you a range of a high and a low. And if the range gets tighter and tighter, it's like squeezing a bottle, where if you keep squeezing the bottle, eventually it's going to pop. Same thing happens to the market. You keep squeezing a range, you're going to keep squeezing a range until it pops. So you could see this tight range, and it finally popped. And it's not as clear on the VIX chart as it is on the SPY chart, but let's take a look at what that looks like on the SPY chart. So on the SPY chart, right, if you look at this pre-market activity, you can see that we're in a tight range, and then we're failing to reclaim this over this orange line. This orange line is the equilibrium point, and the tighter that we get, the more a better way to phrase this is like, you want to see where the majority of candles are as we get tighter. So as we get tighter in a range, you want to see, are we beneath that orange line or are we above that orange line? So look, if you look at pre-market, like we had a few candles above the orange line, but a majority of the pre-market from literally 7:45 until open, we were just not able to reclaim that orange line. So in my head, I'm ultra bearish going into today. So that's why I entered the Netflix puts in like minutes. Minutes into the market open, like 5 minutes in, I was in those Netflix puts. So basically, we were unable to reclaim this orange line, and look what happened. Same thing happened. We just dumped. Same thing happened with the VIX chart. We were on top of that. If you go back to the VIX chart, we're on top of that orange line. It's kind of tighter because VIX doesn't really move as fluidly as a SPY does, but VIX is kind of getting in a tight zone, and it keeps bouncing off the lower band and going up, right? That shows me that VIX is looking to spike, and when VIX spikes, the market drops. So that's why I was bearish into today. But that's not the trade that was the biggest trade for today. The biggest trade for today was the SPY calls that we bought. And let me tell you, the same thing happens with the Bollinger Bands, not only during pre-market but also during market session. So during market session, you'll see that, look, we dropped. When you see a big move like this before, look, if you see a big red move like this before 11:30, 12 o'clock, you're going to expect chop for the rest of the day. I've been trading the market for a long time. I've seen minus 2% days. I've seen minus 3% days. I've seen all of it. When you see a big morning drop and you don't see buyers stepping up, you're going to see chop for the rest of the day. You can call this chop. There was money to be made, but this is still chop. It's not going anywhere. The price action, yes, it went up, but it's not going anywhere like beneficial, really. It's still no man's land. It's still in the middle of nowhere. The price action is still within two bands. It's still in the, if you look at the 1 hour chart, it's still in the middle of nowhere, right? This price action isn't showing us where we're gonna go. So what did I think when I saw this? Okay, I was like, I see a lot of wicks to the downside, 1, 2, 3. Even though we're seeing lower lows and we're seeing lower highs, we see a lot of wicks to the downside. And today I didn't play the 5-minute timeline very much. I honestly played the 15-minute timeline, because when you see a big big morning move like this, you don't want to play into a lot of noise. So a lot of noise meaning like 1 minute time frame where you just see a lot of candles. It's not very useful. 3 minute time frame, same thing. And even 5 minute time frame for me is considered a lot of noise. I honestly don't want to see that crap. So what do? I up my levels to 15. So I up my time frame to 15, and that's 3 5-minute candles, right? That filters out a lot of chop. So now let's look at what we did. So we see that we're catching a lot of bottoms. 1, 2, 3, 4, 5 bottoms. Over here, I'm thinking, okay, look, this is probably our bottom, but I'm gonna wait. Since we see the MACD curling up. We see MACD curling up, and finally it crosses over the upper band, which shows us our bullish, and we get a long indicator here. And not only this, some of you guys are gonna be like, okay, well, I don't have access to your indicator. How would I know this trade was coming? Perfect. I have that answer for you too. So when I said I didn't trade on the 5-minute chart, that doesn't mean I didn't look at the 5-minute chart. You see this big band, this big Bollinger Band, it comes slowly tighter together, right? We talked about this a few minutes ago, where if you the tighter that we get, this zone has to break. It has to break. The market will never ever be flat for a long extended period of time. I'm talking about, like, it won't be flat forever. There's gonna have to be a move, right? So you see this tight zone, and then you see, oh my god, we're reclaiming this orange line. We're staying above this orange line. So when I got my 15, when I saw MACD, you can use any MACD indicator. You can use any MACD indicator on the 15, any timeline. But you want to confirm on more than one timeline. I saw this on the 5. I see, okay, we're reclaiming that orange line. We're in a really tight zone, but I saw 1, 2, 3, 4 candles. I'm like, okay, that's my entry. This candle right here, when I saw that we got wicked off of this Bollinger Band, I was like, okay, you know what? Let me see where we are on the 15-minute chart. Okay, we're slowly climbing up. There hasn't been a red candle in some time. My entry right there, and then we watched it play out. Yes, we did get a red candle here, but if you played it to all the way to the upper Bollinger Band, you see it's coming down, and it touches the Bollinger Band and comes down. You were able to make 125%. I personally got out at 50%. I made my 50%. I was able to turn $40 into $60. That's completely fine by me. But if you were able to stay in this trade and you were able to hold it out, you saw upwards of 80, 90, 100%. This is a very interesting trade, because we just made a video recently about talking about Bollinger Bands and how they're not always very good when it comes to being by themselves. However, if you see us using not just this, but market frame, we're using VIX as an indicator, we're using like the equilibrium as an indicator, we're using MACD, we're using a bunch of stuff together, you'll notice that all of these things, when they co-align, when they all add up, we're using multiple time frames as well. When they all get together and they all show us the same thing, that is when we will find these golden trades. There's no point in us forcing anything. Like, honestly, I could have after my Netflix puts I saw this huge red chart, I could have FOMO'd and be like, oh damn, I missed this entire red day. There has to be more downside, right? There's no stop to this. There's no stop. I've seen these before. There's no stop. They're gonna keep going red. But no, I had to stay patient throughout the entire day. I watched it. I'm like, in my head, I knew eventually there will be some sort of bounce, because these type of days with morning moves, they will chop back up, even though the price action is insignificant and not worth playing over swings or entering while there's red. There is money to be made on the scalp side. So this was just a quick recap of what I did today. And if you were able to understand what I saw, or what I'm viewing, what my eyes are looking at while we're trading, like, that is the type of trading I think that will send people, like, that will get people far. I'm not saying I'm the best trader ever, but I've made a lot of mistakes in these type of markets. I've played the crapshoot market in 2022. That was not worth playing, but I've seen a lot of different markets. I saw a bull rally, I saw a bear rally, I've seen everything almost. So if you guys like this type of content, these type of trade recaps, type of day recaps, if you guys like this type of stuff, drop a like, any comment to just show me that you guys are liking this type of content. We're really growing fast. I appreciate the growth, and I don't want to stop. Let's try to make this a very frequent thing. Let's try to upload almost every day. But yeah, thank you guys for the growth. Thank you guys for the support. I'll see you guys tomorrow. If you guys like the content, you know what to do. Share it, socials, everything like that. But yeah, I'll catch you guys next time. Peace.